Good afternoon. Recognizing that I'm the barrier between you all and the bar and returning phone calls, I'll try to speak quickly through the slides. So theme of our presentation is build it and they will come, question mark. Will the Charleston industrial market put up or shut up? So we're seeing right now a significant amount of spec development underway. Going through the product, you're seeing unprecedented spec development under construction now and slated for the near term. You can see from this slide, concentrations are in Palmetto Commerce Parkway and in the Jedburgh corridor. In Jedburgh, you've got a 588,000 square foot building for Clarius that'll deliver in November. Sammit's breaking ground on 120,000 square feet. Keith Corp just delivered 300,000 square feet, and Ridge is delivering 343. So that is equal to probably 3 to 4 times what's ever been under construction spec in the market in a given submarket. Going down to Palmetto Commerce Parkway, you've got, again, Sammit in partnership with the Beach Company. You've got Childress Klein continuing to churn through Cross Point. Patillo breaking ground again soon. Zeebeck looking to potentially do something. So substantial growth, and then North Signal in North Point. If you look at year-to-date deliveries, there's still a significant amount to deliver in Q4 with the Clarius building and Childress Klein. A number of those other projects will push into 2018, but it looks like we'll be tracking, equal to the strongest year in deliveries. And this is not just spec development. This includes Buildtosuit as well. So just note that for a distinction. Vacancy rates right now across the market for Class A are in the 7.5% range. You can see these are color-coded by quarter, so you can see in 15 and 16, the lion's share of absorption for each year occurred in its fourth quarter. If you look at 15, where there was a slight dip in the third quarter, similar here, we had a quick dip in the second quarter with some move-outs. So expecting, a big push in the fourth quarter, and the whole theme, put up or shut up, with all the spec construction under construction today. With the fourth quarter deliveries, if we don't see absorption between now and, say, November, we're looking at a 200 to 250 basis point increase in vacancies, and we could be scratching double-digit vacancies for the first time in a while, which, again, is a sign of health because, developers are investing here. We're seeing new capital with, private equity from Chicago and Jedburgh, Ridge Transwestern, a lot of developers from Atlanta. And so we're really appealing to that the regional developer and getting into more of the national equity. Next slide. So this shows rental rate growth from, call it 16 projected through 20. This is a forecast, trying to do some forecasting. So this is just taking I think it's a 2% increase annually, which is, at a minimum what you're seeing baked into leases in Class A product today on the industrial side. What I find interesting here is, you hit $6 in the Class A realm in 2020. If you look back at Cross Point in 2012 when they did the Jazz Forwarding deal, that was a $4.75 rent. So I think that's a really, that's a kind of down the middle transaction. Looking at 2020, we think six and a quarter is pretty reasonable to project. So substantial rent growth. And what is also notable here is just the rent growth in Class B. It used to be that the cotton warehouser or the paper warehouser could go out and get a 3 1/4 lease with no problem. Those days are over. If you look at Hawk Avenue as an example, that building, I think I forget the exact number, but it was leased 2 or 3 years ago at $345, and they just did a $475 deal 4 years later. Which was, a Class B building, and interesting to see that rail driving that rental rate. So this is an interesting one. So we'll talk about the port in a minute. TEU is the term for 20-foot equivalent unit, how port volumes are measured. And so the discussion is always, show me the correlation between increase in TEUs, because that's what the Charleston port always touts. We say the industrial market's strong because of the port. And so what's that correlation? So this shows deliveries trailing, and a few things that you can notice there on deliveries is 12, 13, and 14 were very stagnant in terms of delivering new industrial product to the market. Substantial growth in 15 and 16, and 17 should look strong by the end of the year. If you look at the TEU volumes, they've continued to ratchet up. the last fiscal year for the port was its record year, finally surpassing what it did. I think it was in 2005 when it had its last best year. And the South Carolina State Ports Authority fights outside of its weight class and is bringing a lot of that cargo in. So we're looking to see, with some of these projects in Jedburgh, for example, how does that impact the footprint of some of those buildings in terms of recruiting big import centers. So recurring theme, it appeals to hotels and everything else. What's driving all of this? Daimler, Mercedes, Volvo, Boeing, and the port are all driving the industrial market in its growth. I would posit that a lot of the spec development has occurred based on the port story, but we haven't seen that port absorption in lockstep yet, but I think that's what we'll hopefully see Q4. And then automotive growth has really been tremendous. I mean, for Volvo to subtly invest in an additional $500 million and hire another 2,000 people, that's as big an economic development announcement as a community our size could hope for, and it happened a couple weeks ago and felt a little bit like a blip on the radar just because they're here and they're growing, but that's going to make a major impact, we think, on absorption. So looking at a little bit of an East Coast, West Coast dynamic, there's been a major shift in cargo volumes going from the West Coast to the East Coast. If you look at pre-recession levels, the West Coast accounted for almost 60% of product brought into the U.S. via container, with the East Coast being around 40%. So that was a 18% delta in 2007. If you look at 2016, it's about an 8% delta. So a huge amount of that cargo has shifted to the East Coast. That's, in my mind, the easiest way to explain the Panama Canal expansion, which was also, you saw Suez making a major impact even before the Panama Canal expansion was complete. But you look at total footprint of industrial markets on the East Coast versus West Coast. The East Coast is already 55% of the warehouse market due to the fact that there's greater population base, and then you start bringing in the additional cargo, which leads to import centers, which are generally big buildings, and we think that that's going to have a major impact in terms of a positive impact on absorption on the East Coast, particularly in the Southeast. So then you look at, how does Charleston stack up to its peer ports? So, in the Southeast, we compete predominantly with Savannah and Virginia. Both of those are larger ports, so the stat can be a little bit misleading. But if you look at year-over-year growth on a 3-year trailing average, South Carolina has grown on a percentage basis faster than those other ports. That's a kind of sly way of saying we're outperforming them, where if Savannah's doing this presentation right now, they say we have more TEU growth because their number has grown by more. No matter how you cut it, there's more cargo coming to the Southeast, and that is having a positive impact from a development perspective on each of those respective markets. Savannah is seeing a huge amount of spec development as well, and the Virginia market is as healthy as it's been. So, if you're looking at, what does all this mean for Charleston? We're seeing the port, the auto industry, defense industry, and just general population growth leading to absorption. We know that there's more spec development activity going on now than there has been in the history of Charleston. So the question is, where do the new occupants come from? We think that those are, shared amongst the auto importers, auto suppliers, import centers, and potentially defense contractors. So in short, we're very optimistic that the absorption will come, but we still have some transactions to get done before we can hang our hat on that. Thank you.